Exactly how much did the US GDP grow last year? That depends on who you ask. On January the 25th, the Wall Street Journal said the US economy grew 3.1% last year. This is echoed by many other mainstream media. But on the same day, the US Bureau of Economic Analysis, the authority on the matter, put the number at 2.5%. Which one to believe? With the US media often heading the charge and highlighting worst-case scenario for China's economy, are they doing the opposite when it comes to the US economy? I was joined from London by John Ross, Senior Fellow of Chongyang Institute for Financial Studies at Renmin University of China. Let's start with some peculiar phenomenon we observed, or rather you first observed on some of the very reputable media outlets in the West when they talked about the performance of the US economy, because there seems to be some kind of discrepancy between what they have been writing and what the US official institution, which is officially responsible in disclosing this kind of number, what they are saying. For instance, the Washington Post reported that the US economy, the surprisingly strong US economy, is outperforming all of its major trading partners. Of course, that would include China. The Wall Street Journal, published almost in the same period of time, says US economy grew 3.1% last year, but on the same day, the US Bureau of Economic Analysis under the Ministry of Commerce says real GDP increased 2.5% in 2023 for the United States. But that number is somehow overlooked by all of these major news outlets.
Well, yes, I mean, there's so many fake news, as they call it, in this statement, for example, by the Washington Post, and it's fairly typical. That would take quite a long time to deal with them. So let's slowly unpick it, right? As you said, the US Bureau of Economic Analysis, that's the official US agency, was very clear. It said that US GDP growth in 2023 was 2.5%. Well, we can compare that to China's, which is 5.2%, but I'll come back to that in a minute. Right, and that's for the whole of the year. So, but you have this strange thing whereby a number of US papers, all on the same day, announced that it was 3.1%. Okay, but this is statistical cherry picking, because what it does is it compares the last quarter of 2023 with the last quarter of 2022. But the point is, the US economy during the first half of the year grew much more slowly than 2.5%. It only grew less than 2% during the first half of the year. So, of course, therefore, if you average out the year, the Bureau of Economic Analysis is a serious statistical agency. So it averages out the two and it comes out with 2.5%. You can't cherry pick and take one part of the year and compare it with another part of the year if it gives you a better number. You've got to look at the year as a whole. So that's the first thing.
Could it be possible that they didn't see the 2.5%, or by the time they wrote the story, the 2.5% wasn't released yet? They only saw the 3.1%.
No, it's absolutely impossible. I mean, you know, I know exactly when the GDP statistics in the United States are going to be published. So I'm normally on their website about 1 minute after they're released, or even less, to do that. And any responsible journalist can do that. And the first thing you'll find out when you look at the growth for for 2023 is it's 2.5%. You don't have to do any calculation for this, incidentally. It's just what they state. You can just look it up. So that's the first thing that's extraordinary. Secondly, then, the claim that it's growing, the US economy is growing more rapidly than its competitors is simple nonsense, because the Chinese economy grew 5.2%. That was announced a few days earlier than the US figure. The US economy is growing at 2.5%. So any elementary arithmetic would tell you that China's economy was growing more than twice as fast as the US economy, and so it's just complete nonsense. I mean, it's, you know, literally fake news. I mean, as it appeared, simultaneously the same sort of nonsense appeared in several newspapers and one in the US on the same day. I think somebody decided that they wanted to spin this story, somebody very central to it, but it's just factually not true.
And it's quite astonishing, because we're not just talking about one news outlet, the Wall Street Journal, for instance. We're talking about the Wall Street Journal, the Washington Post, and we also have the President of the United States retweeting the Wall Street Journal tweet about breaking U.S. economy grew 3.1% over the last year, right, as strong consumer spending and hiring upended recession fears. So there's no explanation. They simply took the number 3.1% as the real GDP growth from last year. And President Biden retweeted that, saying, today we learned that our economy grew 3.1% last year. There is no explanation. There is no nuance, just like that. Whereas actually it's 2.5% then.
Well, yes. I mean, even if it had grown by 3.1%, it still wouldn't make it true that what the Washington Post claimed, that the US economy was growing faster than its competitors, because even then you would have US growing at 3.1% and China at 5.2%. But it's not even true, the 3.1%. But incidentally, I mean, it's not merely this year. If you take the whole period, for example, the pandemic, China's economy grew by 20.1% during the 4 years covering the pandemic, because there are lots of short-term fluctuations during the pandemic. So it's better not just to take very short period of time to get odd results for individual quarters due to lockdowns and all that type of thing. But if you take the 4 years, the US economy grew by 8.1% and China's economy grew by 20.1%. So China's economy was going 2.5 times as fast as the US. And in fact, actually, the US economy during this period was growing below trend, because its average is almost exactly 2% a year during those 4 years. And its long-term trend growth is a bit above that, 2.1%, 2.3% exactly how we put it. So it's not doing extremely well. It's growing even below its normal trend. It's 2023, it was a little bit above its trend. But if you take the whole period, it's actually growing below trend.
So let's be absolutely clear, just to call a blade. So these media were cherry picking the nicer looking number, the rosier looking number, and try to paint a more positive picture of the US economy. Were they doing that?
Yes, they were doing it. And I don't know whether they're doing it because they deliberately want to spread fake news, because they're totally sloppy journalists, or whatever they're doing, but it's false claims. In fact, it's only one of a number of sort of delusional claims that are appearing in the US media at the present time. For example, they're going on and on about how the US stock market is at a record high. Well, that's only true if you don't take into account inflation. It's mad not to take into account inflation. If you take into account inflation, the US, since the last peak before this one, at the end of 2021, the US stock market's gone up by 6.6%, but inflation's gone up by 9.7%. So actually, in real inflation adjusted terms, the US stock market is not at a record high at all. I mean, if anybody said you should measure wages just by the nominal wages without taking into account inflation, this is a statistical trick. And it's the same type of statistical trick. So at the moment, you have a sort of delusional situation in the US media, in which you have deliberately false thing. I'll say deliberately, because a lot of them saying that China's economy is growing incredibly slowly and there's a deep crisis and so on. And the US economy is growing incredibly fast, but the Chinese economy is growing 2.5 times as fast as the US economy over the last few years, more than twice as fast last year. So where's the crisis in China? It's
where's
just
the crisis? That's the same question I'd be asking, because there is this notorious article about who killed the Chinese economy. I'm pretty sure you saw that too. And I asked, in a debate openly, I said, this is ridiculous. What do you mean, who killed the Chinese economy? With 5.2% growth, the Chinese economy is not dead. But it seems that the kind of rhetoric is on the rise these days, especially even when U.S. National Security Advisor Jake Sullivan was talking about U.S.-China relations. He was talking about, everybody was talking about China catching up to the U.S. economy. Now that is something that is uncertain, because China's economy is experiencing a decline and U.S. economy is on the rise again. Is that kind of assessment objective? Because we do see some kind of statistical trend that the GDP comparison between China's and that of the United States seem to have widened over the past years instead of closing up.
This is a nominal GDP because it's caused by high inflation in the US. And there was a quite good comment on this actually, because not all Western journalists are spreading this nonsense. That Chris Giles, for example, the economic commentator of the Financial Times, said these were absurd comparisons by amongst people who should know better. And I think that was perfectly adequate. The US has had very high inflation during the last 2 years. At its peak, it was over 9%. So, of course, it's nominal GDP, that is measured in current prices, has gone up greatly. But this doesn't make the situation better. I mean, look at it the following way. Suppose you want to buy a pint of beer for $1. And suddenly, after a year, the pint of beer costs you $1.10. So you've got 10% inflation, right? Okay, you're no better off. In fact, you're actually worse off because the price has gone up. So, and these types of just fluctuations in nominal GDP just sort themselves out over periods of time. And as what Chris Giles said, is these types of comparisons are made by people who should know better. That's why you have inflation-adjusted prices. You know, that's why every serious statistical agency does it. I mean, the Bureau of Economic Analysis in the United States, when it says 2.5%, doesn't mean that it's 2.5% with inflation. It takes into account inflation. And so therefore it doesn't engage in nonsense such as in declaring.
Otherwise, it would have been much higher.
Yeah, it would have been about 5.5%, rough, approximately around, let's say around 5%. Yeah. But they're serious. They're serious people. They don't claim it's grown at 5%. They say it's grown at 2.5%. So this type of thing is just pure nonsense.
Let's take a closer look at the Chinese economy, though. It is in a transition. It is experiencing some difficulties, and you highlighted some of the difficulties. And you particularly point to the drop of industrial companies' profits instead of consumption. Why do you think this is the main challenge that China is faced with instead of slagging consumption that some people are calling to be shored up? For instance, the chief economist of Financial Times said Chinese people need to go out and enjoy themselves and consume more. But you don't think that is the way out?
Well, I'm all in favour of going and consuming more, but you've got to be able to sustain this consumption. So again, let's just put in a few figures. Right, retail sales in China last year went up by just over 7%. That's strong growth. I mean, you don't want to go higher than that because you'll just sort of be generating inflation, right? But if you look at the measure of industrial profits, there's two ways you can look at it. One is you can take the total profits. In that case, industrial profits, they went down by 8.5%. Okay, the point there is you have a number of companies, because this is measured by companies with revenues of more than 20 million yuan. So that number is affected by some companies came over 20 million yuan, some companies went bankrupt, et cetera, et cetera. I actually think it's the best because these companies contracting, expanding is part of the whole process of profitability. But you can do it another way. You can instead take the same group of companies and compare one year with another. But in that case, it's still the case that profits went down by over 3%. And so therefore, you've got a situation where consumption has risen really rather strongly, but profits has gone down. But the profits then have two inevitable consequences. It will have a negative effect on private investment because private investment only takes place in order to make profits. And it will have a negative effect on share prices because if profits are not going up, the stock market shouldn't go up. That, the most elementary economic analysis would tell you this. And therefore, there has been some knock-on effect with not good performance.
How do you reconcile the two trends, though, that the Chinese economy grew by 5.2%, but profits went down by as much as 8% if you take a look at those large enterprises, or 2.3% if you look at the consistent earnings of the same companies? How do you reconcile these two trends, though?
Well, it's shown that there is a profit squeeze taking place in the economy. There will be a number of factors which are involved in this. One will be increase in wages. going above GDP growth rate, which is not sustainable over a long period of time. It can be interest rates. It can be changes in taxation. There'll be a number of things which dealt with this. And you've got to deal with these, therefore, by policies to deal with this. One is I personally think that there's a necessity for cutting interest rates. Not everybody agrees, but that's my personal view, because that will aid the profitability of companies in the very short term. Some adjustments in taxation may be made. And then you've got to have a situation in the long run. Income has to be sustained by GDP growth. If you have the economy, if you have incomes going up much more rapidly than GDP growth, then you will get inevitably a profit squeeze. So I think that is the crucial thing, that consumption was rather strong last year, but profitability was not good. And that needs to be sorted out.
Many thanks, John Ross, Senior Fellow of Chongyang Institute for Financial Studies of Renmin University of China, joining us from London. Thank you very much.